Hello, everyone, and welcome to Stock Market After Hours. My name is Mark Rusin. I'm a CPA here in the state of California. If this is your first time joining us, welcome. If you are returning, welcome as well. I hope you guys are all doing well on this Wednesday afternoon. This one's going to be a little bit of a short Stock Market After Hours because, as many of you probably already know, because hopefully you're signed up, we're going to be doing a little 2-day valuation workshop. So we'll talk more about that here in a second. There's also some more info in the link down below, but let's start like we always do. Let me know where you're tuning in from and what stocks have you been buying. Blake, good to see you. Hope all is going well. John Bircher, my good buddy in Tulsa, Oklahoma. I actually need to reach out to you, John. I have a question, an Oklahoma question that I need to ask you. Chicago is in the house. Philippines is in the house. Jimbo, hope things are going well here. LA, Virginia, how we doing? What are we purchasing here? An Ethereum ETF, EZET, and a private equity APO en route to Arusha. What's TZ? Someone help me out there. Bavek is buying AMD, Broadcom, Palo Alto, Amazon, Microsoft, going on a tech binge buy there. Blake's been buying a little Alphabet. I think that's continue to be a great buy. Greetings from Kuwait at 1 a.m. Mohammed's staying up for the stock market after hours. I love it. Ron, good to see you. Orange County with Kurt, fellow neighbor there. Kurt, what part of Orange County are you in? How do you feel about investing in aviation companies like Archer Aviation, Joby? So those ones there's a lot of speculation behind them. Obviously, you're going to be paying a pretty penny for them in terms of valuation. They don't really have much in terms of earnings to go off of. So it's kind of a shot in the dark in terms of if you're well versed on that particular field and you believe there's actually some substance there that could result in some big revenue gains eventually when things kind of break through, then I think you just got to manage the position. It shouldn't be a sizable position in your portfolio by any means, but everyone's portfolio should have a little piece carved out. Some people have bigger pieces, some smaller pieces in terms of, hey, here's my shot in the dark positions, but just make sure that it is a manageable size, nothing more than 2 to 3% of your overall portfolio, so that if it does crater, it doesn't bring your whole portfolio down with it there. Mark is a baller speaking facts. Love it. Matt Simmons from Maryland. Good to see you, Matt. In terms of security stocks, do you prefer CrowdStrike or Palo Alto? Palo Alto is obviously the cheaper option. A little bit slower in terms of growth. So maybe you can say there's a little bit more in terms of safety or less, I should say, less volatility. CrowdStrike, though, is the leader. I love investing in the best, highest quality companies in various different sectors. So both of those, I don't think you can go wrong with, but I think you should have different expectations for one over the other. CrowdStrike, definitely you're paying a premium for. So you need some sizable returns for it to make sense there. Lionel, good to see you, my friend. Hope things are going well over in the UK. Was watching a little Wimbledon here this morning on the way. It was the morning time here on the West Coast. Game started like 6:30 in the morning. So, you got stocks on one TV or one screen in the office and Wimbledon on the other. Cardinal Health for Ron. Jimbo's retired in the Philippines, been buying a little more dividend ETFs, QQQI, CHD, SPYI, and SGov until the rates go down. Thanks for all your help. I'm new to the channel. Well, great to have you, Jimbo. We love growing our community. We all have one thing in common. That's to build generational wealth. Need to know how you feel about PBR. Buy. Good show, Joyce. Thanks. We are just getting started. Today's going to be a little bit of a shorter show, just given the fact that I have a evaluation workshop. Hopefully, you guys are signed up for that. If you've kind of been spinning your wheels trying to figure out, hey, where do I start with? If I want to analyze a specific company, I get all of these names like a Joby Aviation, or maybe you're not as familiar with some of these other companies. Am I too late to the game? We never want to just buy stocks just because someone tells us to buy stocks. It's okay to create kind of an ideas list, whether you're watching a YouTube video and watching my videos or other content creators, whether you're watching or listening to a CNBC or an investing podcast or reading an article. You never want to just follow someone in just because they said the stock's a buy. And that's coming from someone that publishes, YouTube video saying 3 stocks to buy, 4, 5 stocks to buy for this particular month, so on and so forth. You should take it with a grain of salt and then know how to perform your own due diligence. That's the idea of our 2-day workshop that we'll be going through starting at 5 p.m. Pacific time. So let me show you guys exactly what's going on there. This is our 2-day stock valuation workshop, all the things that we'll be going through, breaking down actual metrics to analyze specific stocks, whether we're talking about growth stocks or dividend stocks. We're going to look at both factors there. And then also, obviously, the valuation metrics. How do we know if a stock is cheap? How do we know if it's expensive? Is it a buy? Is it a sell? Is it a hold? These are the things that we're going to be breaking down in our 2-day workshop. So make sure you guys check out the link down in the description below. Right now, we only have 4 spots remaining until this program is completely sold out. Again, it's sold quickly, just like our popular options one, although the options one went a little bit quicker here. But with valuation, we do have 4 remaining spots if this is something that you want to join. Again, if you're not able to join us during the live portion of it, you can still sign up and you will get the recording of what we discussed there and all of the material that comes with it, slide decks, so on and so forth there. So hopefully we'll see many of you on the in the 2-day valuation workshop. Again, we got 4 spots remaining there. So let's jump in and take a look at the sectors to see where are things at right now. So as you can see here, we'll start by, let's start with the 12 months out. As we can see, the financial sector, we're kind of dwindling. The last week when we looked at this, we had a few more sectors. So now we're down to, call it 5 different sectors. I want to say last week was 6 or 7. So S&P 500 slightly outpacing technology now over the past 12 months, but outpacing is financials, industrials. I love to see financials. Anytime we have financials leading the pack, that's usually a good sign, because when financials are doing good, that means company and loan growth is hopefully doing well. Companies are feeling more comfortable about taking loans as rates come down. That's only going to further help financials. The other thing you put into it is the economy sticking together right now. That's going to help financials. What's on the horizon? Probably likely coming in September, lower interest rates. Sure, that's going to impact what's called the net interest margin, which is the difference when it comes to financials. That's the difference between the interest they receive on loans. Like, let's say you go out and purchase a home, it's a 7% interest rate. They're earning 7% on the money that they loan you. But they have to give some of that back by way of some of the programs that they have. Let's say it's a savings account, a high yield savings account where they're giving 2% away. So the net interest margin is going to be the difference between what they're bringing in compared to what they're taking and giving back by way of some of these other programs. So although the net interest margin could come down, loan growth could pick up, because there's a lot of small companies that are looking and saying, business loans right now, I can't do 8, 9, 10% interest on a 10, 15-year loan right now. I know rates are going to come down, so how about we wait until that happens? So margin comes down, but hopefully volume can tick up. And then you add into lower regulation, which we're already starting to see a little bit of that. There's a lot of catalysts for financials over the next 12 months here. Industrials, that's been another big sector there. And you could see a lot of that 22% that's taken place over the past 12 months. A lot of it's come in the past 3 months. As you could see, industrials up 26% alone in the past 3 months. So that shows you that really before the past 3 months, this was the sector that was actually in the red. So it has had a resurgent. A lot of that has to do with tariffs. If we're onshoring a lot of manufacturing and things like that, it can definitely benefit the likes of the industrial sector there. Utilities, they've been performing well over the past 12 months, up 18%. Communication services, that's going to be the likes of Meta, Alphabet, and then consumer discretionary with Amazon. Right now, we're in the middle of Amazon Prime. I don't know if you guys saw it, but after the first 24 hours of Prime Day compared to the first 24 hours of Prime Day last year, sales are down actually 41%. Thought that was a little bit surprising, but then again, it's not all that surprising, because last year and the past few years, it's only been about a 2-day event. This year, it's a 4-day event. So people are looking at it from a different perspective, saying, hey, I got some time to do a little bit more browsing, probably throwing things into my cart to see how much do I really want to spend. So have you guys already been spending some money on Prime Day sales? I know I bought some luggage is the only thing that we bought. You know, we went on a cruise. When was that? In May, a couple months ago, we went on a cruise and we were just looking at our luggage. We're like, wow, this stuff is just so beat up. We had, our kids had ones that they still had when they were really small. It felt like it fit like 5 shirts in it, and that was it. So, we were like, hey, let's wait off for either a Black Friday sale or a Prime Day sale, and boom, we got ourselves a new set coming. Should show up today, hopefully. So that's where we're at over the past 12 months. Year to date, we could see industrials at the top, info, tech, communications, materials. So again, a lot of us have missed the boat on the industrials sector. I'll say myself included. I do have some industrial exposure, but I'm not overweight industrials by any means. Now, if you want to include Uber, which technically is an industrial, that's kind of what has led the charge with industrials. But if you want to look at more traditional industrial type companies, so I'm going to think of the likes of a Caterpillar and Deere and things like that. They're performing quite well, but Uber is a stock that I continue to like. But a lot of us have missed the boat on industrials. But another angle of that is, if you have and you do want some of that exposure, is materials, because I like to look at those two as hand in hand to a degree there. So materials is kind of an area that I'm looking at right now. And you can see over the past 3 months, materials is up 18.5%, which you would think normally 3 months, 18.5%. Oh, that's got to be one of the top performing sectors. Actually, it's just middle of the pack, because technology is up 40%, industrials up 26%, communication services up 26% as well. So coming in at 5th right now, which is kind of wild when you look at these 3-month figures. Over the past month, we have infotech, energy, and materials is up, but it is good to see that, when you look at a year-to-date perspective, there's really only 2 sectors that are in the red: healthcare, consumer discretionary, as we see right there. So that's where we're at in terms of sector performance. Take a peek real quick at the fear and greed index. As we could see, extreme greed is what we have finally crossed over into. We're exactly at that 75 rate right there. So this is what we've been talking about, guys, over the past few weeks is, we've been firmly in the greed. We were in the lower half of the greed section. As you could see, just a month ago, we were sitting at 61. So now we are kind of going into this area where we've talked about there is some potential headwinds coming up. We have valuation concerns, which we've talked about over the past 2 weeks. We have seen from a technical perspective, and we said, although the market overall wanted to get to all-time highs, things still looked overvalued. We said, hey, we believe that the market wants to get a new, fresh all-time high, but then after that, I don't think it's out of the question that it needs and will likely take a breather. What have we seen over the past few days in the first half of this week? It's been a little choppy from a volume perspective, from just overall performance perspective from that standpoint. So not all out of left field by any means on what we're seeing right now. We've been talking about it on this. We've been talking about it within my Discord community on our Edge Plus report and things like that. This is what we expect right now. There's no big economic news that's due out. There's no big earnings report that's due out. So we're going to get back into this market where it's going to be headline driven. What is the headlines right now? Tariffs, tariffs, tariffs. And we're getting these tariff tensions where, President Trump even said today, hey, we're moving our focus all back to trade. And he's sending out these letters to 15 plus different countries saying, hey, we've tried the negotiation route. This is what the tariffs are. If you actually want to get back to the table, then let's get back to the table and discuss. But I think the big one is still going to be what happens with China, still trying to hash one out with the UK, with the EU, with the European Union and things like that. So we'll have to see where things kind of scope out by then. So doesn't mean there's not good stocks out there and cheap stocks. I always like to say there's cheap stocks out there. You just got to find them, and finding them is doing your due diligence ahead of time. And in my latest video, I talked about a few stocks to not necessarily buy right now, but to be ready to buy in a dip. How do you know where to buy them at? You have to do your valuation. You have to do your due diligence ahead of time. If a stock's trading at a current multiple right now, and you compare it to a 5-year, 10-year average, you'll go, oh, wow, has anything really changed with this business? Does it warrant a higher multiple? If the answer is no, then it's probably a stock that needs to be in the hold category, or maybe you want to trim some profits from that standpoint. But how do you find where to buy it? Okay, well, here's their 5-year average. Sure, I'd love to buy it there. That'd be more fairly valued. But what if it fell 15% from here? What would the multiples look like from there? That's doing your due diligence ahead of time. But how do you know which multiples to look at? It's going to differ between a growth stock, between a profitable or non-profitable stock, between a dividend stock or non-dividend stock, and things like that. So you got to know the different metrics to look at, and that's what we're going to be talking about within our 2-day workshop. So again, we still have at the start of this, I don't know if anyone has signed up since the start, but we have the 4 spots that are open. We'll be starting at 8 p.m. Eastern time today and 8 p.m. Eastern time tomorrow. You're going to get access to all of the slide decks that we go through, any of the handouts that we have as well. So we'll be diving into really growth stocks today. That's going to be the key focus today, looking at some examples, going into some technical indicators, and then some dividend stocks and different metrics, valuation metrics to look at tomorrow. So in-depth type content here, 2-day workshop. You'll get access to everything that we go through here. So definitely make sure you check that out. There's a link down in the description below. And actually, I will just copy this and post it in for those of you who just want quick access in the chat room. You can find it right there as well. So, all right, so let's take a peek here at some news articles I wanted to go through. And a lot of these were, if you're part of our Stock Investors Edge, you get a midweek recap. One of the ones I thought was intriguing that I wanted to look at was the valuation. So there's been a lot of talk from Starbucks and the new CEO, Brian Niccol, on wanting to reduce some of their exposure, I should say. They're still committed to China, but looking to sell off some of the ownership. And that's the second largest footprint that Starbucks has there. So in looking, Luckin Coffee has really taken a lot of they've been a fierce competitor. That was a stock that had a bunch of fraudulent claims, and it was really a penny stock just a few years ago, and it has really, climbed back in a big way. But they have been, taking some of the business away from China. But as we could see right now, when we look at this valuation, this is per CNBC as of today, the current valuation that they're really looking for in terms of getting a stake in the Chinese business in Starbucks is around $10 billion. For that overall. If we look, you could see what portion of that is, again, Starbucks still wants to retain roughly 30% of all of it there. So Starbucks has a market cap of around 107 billion. So around 10% of the entire market cap of Starbucks in general there. So we'll have to see where that goes there, in terms of Starbucks. Waymo. And I know this is one where I get a lot of comments on from the Tesla bulls, which, they kind of have blinders on. It's like, nope, it's Tesla and that's it. I can't look outside the box. I can't, it's Tesla's going to smoke these guys and things like that. We got to look at facts, guys. And the facts is Waymo continues to perform quite well. Waymo continues to expand. We're not talking about a fleet of 15 cars where they're driving on the other side and driving erratically and slamming the brakes and on the wrong side of the road and things like that. No, that's been the reports from Tesla. Everything was great in terms of Tesla, but yeah, that's because it was all of the Tesla bros that were the content creators that only talk good things about Tesla that were the ones doing the test drives for the first week out in Austin. Of course, that's pretty much their job, but you have a CEO right now that, whether, I get the comments all the time. They're like, Mark, you kind of look like Elon Musk. I don't know if that's much of a compliment or not, but what I tell them is I say, well, my bank account doesn't look like Elon Musk, but this is a guy that brilliant mind. But I continue to say, unless he has more hours in the day than I have, how in the world is he able to focus on this many things and actually bring value to it? Well, you have Tesla, the Boring Company, SpaceX, Starlink. Oh, and by the way, he wants to start his own political party as well. And he continues to take his focus away from these companies in which he gets paid to be in those roles and wants a new pay package. Yet he wants to focus a lot more on the political parties. I don't care about what his political sovereignty is. I don't care whether he wants to be on the right or whether he wants to be in the left or whether wherever in the world the American party is that he is starting. From an investor standpoint, I want him to focus and bring more shareholder value, not an erratic stock because of choices and tweets that he is making. Let's get down to business and start focusing on what we're investing in these companies. And by doing that, we are giving our money, hoping that the leaders can add more value to the companies and push higher the value of the companies. We don't want them to get sidetracked doing things that they're not getting paid to do, and bringing harm to a brand that a lot of people love, but in the past 12, 18 months, a lot of people have come to hate. So let's get back to just focusing on where your focus should be from that standpoint there. And if you want to do things behind the scenes from a political standpoint, more power to you. But let's not hurt a lot of the brand recognition that you've worked really hard at building. Again, brilliant mind. Building a space rocket that can land back on a ship and is reusable. That is just unbelievable from that standpoint there. It's amazing. So again, that's the old Elon rant for the day. What do we think? Do I look like Elon? Maybe when I grow the beard out, I don't as much. I don't know. I get it a lot. The ones that I get a lot are folks say, I was out in Maui. This was last year. I was with my family, and I saw a father and son off to the side, and they were just waiting for me to finish breakfast. And they were just sitting at the exit, and they kept staring at me. And the kid had a football in his hand and a Sharpie. And I'm like, well, what is going on here? Do they notice me from YouTube? Because people walk up to me now when I'm out in Orange County. That for those that notice me, it doesn't happen all the time. And right when I got done walking out with my family, he ran up and he goes, "Mr. Stafford, can I have your autograph? We love you. We're huge Rams fans." I go, well, I'm not a Rams fan, and I hate to break it to you, buddy, but I am not Matt Stafford either. So I could throw a football, but I can't throw it at a professional level. So I feel like I broke his heart there. But yes, Maui is a favorite destination of mine there. So Carson Palmer. I can't say I've gotten that one there. Stafford, yep, I do. I've gotten a lot of Stafford. I went to a Dutch Bros the other day and got a Stafford. So, all right, so let's take a quick look here at the markets in terms of a technical perspective. So let's jump up. This is a look at the IWM, but let's take a look at S&P 500 currently sitting at 62 and change, 62.60 right now. We can see the RSI is still pushing up against 70. Let me give you the full slide so that you guys can see everything here. Let's widen that, make it a little bit easier to read. But as we can see, every time, a lot of the time, I should say, when we get above that 70 marker, and again, this is some of the stuff we're going to dive a little bit deeper into in our valuation workshop, that is an indicator that this is a stock, or in this case, an index that is overbought, and you can expect a pullback. So last time we saw it firmly over 70 was back in July. 3 days later was the peak. We went from 5,668, call it, and we collapsed all the way down to 5,100 and some change. So that's kind of where we were at back on around the 4th of July, 3rd of July last week. We were at 75 on the RSI, and now we're kind of choppiness from there, and we haven't really reached where those record highs are in terms of the S&P 500. The triple Qs, the tech heavy triple Qs, we broke out of this upwards trend that we've been in from pretty much February. We were out of it all the way late February until late June, and we finally got back into that trend, which is a good thing. We've not only got back into the trend, but we firmly held the trend, which if you're able to draw this upper line a lot higher, that gives us a lot more upside from there. But we'll have to see where things go in terms of the Qs. We have the RSI again bumping up against 70 there. Alphabet is one that I continue to like a lot from that perspective. We can see these are Fibonacci lines. Again, something else we'll be talking about within the valuation workshop that we have coming up. Not a lot in terms of RSI. We're kind of middle of the road in the mid-pack 53. We kind of have a reverse head and shoulders that's kind of going on here. If you look in the short period from beginning of June until where we're at in July in the past month here. So this is something that's interesting, the forming that is quite bullish, again, from a valuation perspective. Alphabet is a stock that looks quite cheap as well. I do like this trend that we're starting to see in terms of Trade Desk. And if you are an Edge Plus subscriber, which is our premium newsletter, gets you access to my entire portfolio, buy alerts, seller alerts. Anytime we buy or sell a particular stock, then you got alert that this was a stock that I was buying. I've been talking about it in a few videos of late on YouTube. Decided to pull the trigger on that one and just start with a small position. A lot of these times I just start by dollar cost averaging into it, because tariffs are running the show right now. I'm not going to go drop a $10,000 spot, and then all of a sudden we have a big tariff headline that we can't foresee. No one can foresee. My Magic 8 Ball stopped working many years ago. And then all of a sudden the floor is pulled out, the whole index falls 5%, stocks are falling 5, 10, 15% from there. So that's why I always like to dollar cost average into positions. So I've been doing a little nibbling, sold a few stocks yesterday, bought a few stocks this week as well. So hopefully you're part of our Edge Plus subscription, so you get access to all of that. So one more time in terms of what we got going on. Again, it'll be starting in about an hour and a half. So if you're not yet part of it, you still have time. We have our 2-day valuation workshop. Hopefully you guys can join us for that. Again, at the start of this show, we did have 4 spots. Not sure how many. I haven't glanced over to see if anyone has signed up for that, but we do have 4 spots remaining at the start of this show, a 2-day workshop. Again, if you're unable to join us live, you will still get access to the recordings. You'll be able to look back at those, access to all of the slide decks and things that we go through, any handouts and worksheets and things like that. You will all get in a recap email. So hopefully you're able to join us during the live portion, because it's always great to get questions and make it interactive from that standpoint. The last options one we did a few weeks ago was very interactive. Got a ton of great feedback. People love that one. They're waiting for the next one there. So 2-day valuation workshop today and tomorrow, starting at 8 p.m. Eastern time, 5 p.m. Pacific. That's the live portion. But again, we do have recordings if you're unable to join the live one. So that is all I got for you guys today. Again, we are in this market where it is really headline driven, and those headlines have all been centered around tariffs right now. So it can be a seesaw. We're kind of in this choppy period. So we'll have to see where we kind of end the week moving in. We're still a few weeks away until we get into really that Q2 earnings season, which is going to be real telling. A lot of folks are predicting whether we're going to have a recession or not have a recession. But these next few months, we're going to know the tariff impacts. Are they impacting earnings to a degree that we believe that earnings are going to be impacted? Is inflation returning? All of these things are going to be really answered over the course of the next 30 to 60 days, both through earnings as well as economic reports. But in terms of the week right now, it's really a headline driven, no real major economic news or earnings news to report on. So with that being said, thank you guys for joining me on this Wednesday afternoon or evening or Thursday morning if you're in the Philippines watching this. So thank you guys for joining me and the support on YouTube. As always, throw us a like, subscribe to the channel if you're not yet subscribed, and hopefully you'll be able to join us for our 2-day valuation workshop that'll be starting at 5 p.m. Pacific, 8 p.m. Eastern time today and tomorrow. You'll get access to everything that we show on that. So thanks again, guys, and we'll see you next week. Take care.